Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Thursday, December 4th, and this is your London Open Brief. 3 themes to start the day. The Bank of Japan looks closer to a December rate hike. The US dollar sell-off is pausing as markets lean toward a Federal Reserve cut next week, and commodities are diverging, with gold softer, while oil finds support on geopolitics. In Asia, policy is the story. Reuters reports the Bank of Japan is likely to raise rates this month, and the government would tolerate that move. Yields have been pushing higher, and there's talk of a policy dilemma. But a strong 30-year bond auction signaled solid demand for duration and helped steady nerves. The yen is holding in a tight range against a rebounding dollar, yet the bias still leans toward yen strength if tightening expectations stick. Crosses reflect the mix. Euro-yen is flat ahead of Eurozone retail sales, and Aussie-yen is firmer as markets scale back the odds of further easing from the Reserve Bank of Australia. Turning to the U.S., the dollar's slide is taking a breather. Asia stocks mostly rose after Wall Street gained on rate cut hopes, helped by a softer private payrolls report. Importantly, there's no official non-farm payrolls released this week, so the Fed will head into its December meeting without a fresh headline jobs print. Markets still see strong odds of a cut next week, which keeps the broader dollar tone cautious despite today's bounce. China adds another layer. President Xi signaled plans to expand domestic demand in the next 5-year plan and to deepen cooperation with France, a backdrop that can support China-linked trades, including Australia. Separate reports point to a potential high-level U.S. meeting on whether to allow advanced chip exports to China, which has eased some anxiety in the tech policy space. In emerging markets, the Indian rupee remains under pressure, falling to a fresh record against the dollar as foreign investors continue to pull funds from equities. Meanwhile, in commodities, gold is sliding back toward its weekly lows as the dollar steadies and risk appetite improves, with India prices also down. Silver's powerful rally has paused near record territory, but the upside bias remains intact. Oil is bid. West Texas Intermediate is higher after reports of Ukrainian attacks on Russian energy infrastructure, and dollar Canada is nudging up, though upside appears limited. For markets, that mix suggests policy divergence is back in focus. A firmer yen on BOJ tightening talk, a steadier dollar ahead of the Fed, and cyclicals getting a small lift from China demand headlines point to a mildly supportive risk tone, while precious metals give back some heat. Looking ahead, the calendar is modest. Watch Eurozone retail sales, then in the U.S., the weekly jobless claims and challenger layoffs, with no non-farm payrolls before the Fed meets next week. Any BOJ headlines could move the yen. I'll be watching dollar-yen for signs of a downtrend re-emerging if BOJ hike chatter builds, and euro-yen for any pullback if Eurozone data disappoints. I'm also watching Aussie-yen for an uptrend on China demand signals and a steadier RBA path. Dollar-rupee remains in an uptrend while outflows persist. In commodities, I'm looking for gold to stay heavy while the dollar firms, and for crude to hold a gentle uptrend if geopolitical headlines continue. The takeaway: policy expectations are steering the tape, with optimism firm but headline sensitive. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.